Pretty good. I mean, IBM didn't have any problem with top-line growth that your guest was just talking about. Sales up 12%, and in particular, software sales were strong. Remember, that's an area that CEO Sam Palmisano has really been trying to grow. Software sales up 17%, systems and technology sales up 17%, and services revenue up by 10%. Also, a couple of other important forward-looking indicators for IBM. First of all, the company said its signings, so that's an indicator of future revenue, up to $14.3 billion. That was above even the most optimistic analyst estimate from Wall Street, and the company's raising its annual 2001 earnings per share forecast to at least $13.25 from at least $13.15. Let's dig a little bit deeper into these numbers now. Joining me now by phone to break down the numbers, a man who has more than 15 years experience in the software industry. That's Jason Maynard. He's managing director and senior research analyst at Wells Fargo Securities. So he watches Microsoft, Google, Apple, and Oracle. And we should mention he recently downgraded IBM going into this report. So Jason joining me now on the phone. And Jason, I'm curious, obviously IBM beat your forecast. They beat the Street's forecast generally. Where is really the source of the strength coming from in this report?
I think this was a pretty steady quarter for IBM, and the software was a little better than expected. The services signings were better than expected, although that doesn't hit the revenue line. But I think one of the stories that we're probably going to be talking about today and going forward is the impact that FX has had on the numbers. So they reported 12% revenue growth, but 7 points of that came from a weaker dollar. And so the weaker dollar has continued to be a lever of revenue growth for a lot of tech companies, including IBM.
So it sounds like you think that might not be sustainable.
Well, I'm not an FX strategist or forecaster in that regard. IBM in their slide deck today outlined that they expect the impact from currency to be about 5 to 6 points for Q3. They don't give explicit Q3 guidance, but they did say FX will be a benefit. So, I mean, I think it's fair to say that, we've seen a lot of benefit here. I think forecasting the dollar in this global macro environment is definitely tricky, but FX will be a source, and they're executing really well. It's a steady, high margin, very profitable, a lot of recurring revenue in that software segment. So they should do quite fine. I mean, I would say there's any big surprise either way coming out of IBM.
What about on the signings front, where the company did come in with signings ahead of expectations? This is a reversal of the past quarter or two. Does that mean IBM's clients are getting a little bit more confident that they can look out into the future and sign these contracts with IBM?
We take a little bit more of a multi-quarter view on that front. So last quarter when signings missed, we didn't freak out and get worried about that business. And this quarter when they beat on the upside, we don't get overly excited either. I think, sort of what Q1 took it away, Q2 gave back a little bit. And so I think they're right where they thought they were going to be from a signing standpoint. That business is fairly volatile because you've got a lot of really large, mega-sized, multi-million-dollar transactions that, they can slip, a week or 2 weeks in any given quarter, and that'll skew the number that they have to report. So it's a good bounce back, but when you look at it sort of on a rolling 6 or 12-month basis, I think they're right where we in the market thought they would be.
So, Jason, it sounds like there wasn't anything in these numbers that's going to make you change your thesis, which is, again, I mentioned you downgraded the stock to a market perform. You don't think there's going to be any material growth here in the earnings?
I like IBM's strategy. I think they execute well. It's a really well-run company. The multiple now trades just a shade under companies like Apple and even Google. I think IBM will do really well, and they will be a steady performer. I just don't see big margin expansion. That was one of the hiccups on the quarter. The margins didn't grow as much as we thought, and I think it's a steady performer going forward. And maybe I'd call it this, a little bit more of a macro call one way or another. If you think the economy is going to really improve, IBM should do fine. If it doesn't, IBM's kind of a defensive play.
Jason Maynard, thank you so much for joining us. Jason Maynard, analyst with Wells Fargo.